Good morning, everybody. Wall Street Jesus here. Another week of Saturday sweep series. Another Saturday, by the way. These weeks just keep flying by. It's a little bit out of control these days, how quick these weeks go by. But another sweep series this Saturday. We'll talk a little bit more about the market, about some flow, about what we're seeing as far as on the wise guy activity end. We'll go over some of the names. I know it's been in a pretty choppy environment, um, but to be quite honest, there's been some decent trades out there. The flow during earnings season gets a bit confusing because it's sloppy, it's mixed, a lot of protection out there, which is normal into earnings, and that's not taking into account all the geopolitical stuff and everything else, potential government shutdown, blah blah blah. But all in all, yeah, if you focused on, as many have in the steam room, if you focused on the strongest activity out there, the strongest order flow, there's been some decent trades. We spoke a little bit about this last week and the week prior, how I think the recent rally has really spoiled, especially a lot of the newer traders. They think anytime there's a setup, they forget that they're a trader and not an investor. They want to buy a dip in a name and they expect it to go to new highs in a week, rather than just, if you're a trader, trading. Taking what the market's willing to give you, lock in that profit. You could always revisit the name if it comes back down to a solid entry again, or just wait for another solid setup in a different name. But I think that's been one of the issues I've seen anyway. Again, a lot of traders on the newer side for the most part, but a lot of the experienced guys know when you're in this type of environment, the worst thing, as a trader, if you're an investor, you're playing trends and you have a longer term perspective on things, that's a different story, right? And it all goes back to what we spoke about this, the first Saturday series, that first webinar. Knowing what type of player you are is the most important thing before you even start pushing buy and sell buttons. If you're a day trader, you know what you got to do on a daily basis, and you got to have realistic expectations. If you're an investor or a longer term perspective, you're looking to ride trends for bigger gains, but it's going to take more time. You acknowledge that, and you're not paying attention to the intraday noise on a day-to-day basis. Okay, but a lot of traders, and this probably applies to almost everybody in here, you're traders. You're swing traders. And my definition of a swing trader, okay, a trader in general, is to adapt to the current market conditions, the market environment, and being able to buy something and trade it higher. Okay, sometimes you can allow something to marinate a bit, give it time, and try to get or see bigger gains if the market's in that type of state right now. And then there's other times, a lot of the time, where markets are just consolidating, or choppy is the popular word traders are throwing around these days, where you got to be really selective as far as what you're buying, when you're buying it, and you got to have a realistic outlook. Okay, a realistic outlook. You got to be willing to take what the market gives you. Otherwise, a lot of small winners will turn into losers. Okay, so, and it brings me back to the point. You hear this on social media a lot. It frustrates the daylights out of me. Not only on Twitter and stuff like that, but I've heard it throughout my career. Let your winners run. And I guess it all depends what type of trader you are. Like I said, if you're a trend trader, yeah, you're going to allow your winners to run because that's what your goal is to do. As far as you're riding the trend, you're not looking to take small profits off the table. You want to give that name room because you're looking big picture wise. But that doesn't apply to most traders out there, especially you guys who are trading on the options end. If you allow every single thing you touch, you allow your so-called winners to run, you're going to be up 50, 60% on your calls one day, one little gap down, and you're done. You're done. They're going to suck out all that premium, and then all of a sudden a nice winner is going to turn into a loss. Okay, so you got to try to block out some of that stuff and understand what applies to you and the type of player you are and what doesn't. Okay, and that brings me back to the current market conditions. We spoke in the couple of weeks past, what type of climate we were seeing, right? We knew the recent rally is not the norm. This doesn't go on forever, okay? This is unusual, as a matter of fact. And eventually, when the market gets tired, the buying dries up, you go into some sort of consolidation. Okay, could be a vicious pullback, could be some sideways activity, could be what we're seeing here, where we're just chopping lower in a sense, but not by much. A lot of moving around, but all in all, very minor pullback off the highs. And you really want to start to take notice of that as soon as possible. Okay, and the reason you want to do that is because, like I said, where here you may be able to get away with certain things, and break certain rules that apply to normal market conditions, where you can chase green, you can buy a name that's up, you could buy a Facebook that's up 2 and change, and then catch another couple points in the next couple days. Here's the total opposite, where the successful traders are looking to buy on pullbacks, buy weakness, and then sell that plus 2-point rally, or over the course of a day or two. So we spoke about that, if you guys were on here the last couple of weeks, how even with flow, earnings coming, and just again physics, where the market just can't continue to do this, even sentiment was pointing towards this type of climate, this type of environment. There was a lot of extreme bullish readings out there as far as on the sentiment end, which we discussed. So you really want to adapt to this climate. And, as we spoke about the last couple of weeks, what we've been doing and what we've been focusing on in the steam room, we've been trying to stay disciplined where, for anybody who's swing trading, you wait for that pull, you wait for the market to come in, and then when sentiment lines up, in other words, when people start to get a little too bearish, when people start to get a little too active on the put side, start looking for an entry in names you may be eyeing, current flow that may be coming in, and then again, raising stops, taking pieces off into strength. Again, it's fine. You want to let a winner run, let a winner run. But when you're in a choppy consolidation type environment, you got to at least take some of the profit off the table and let some runners run. Let some small pieces behind, and then this way, stock continues to go higher. The calls appreciate. You make some money. If not, you're not giving everything back. So that's what we've kind of been trying to concentrate on and focus on throughout this whole environment. And what's been great about it is it comes during earnings season, which earnings season becomes difficult in itself, for the simple reason that, no matter how solid the activity may be, how solid the order flow may be, how good the setup may look, chances are, if you want to try to catch a big winner per se, you're going to have to take the risk and hold through earnings, and that's a lot of risk. Okay. Also, on the flow end, again, we have no idea what any of these orders we're seeing on a daily basis mean, right? We don't know the true intent behind these orders unless you know these individuals and players that are placing these orders personally. We don't know if they're hedging, we don't know if they're protecting, we don't know if it's a directional play or a bet. But what we do know, and this game is all about probability and odds, the odds of that player hedging or protecting a position go up dramatically around events like earnings, events like the Fed, okay? And that's what the smart money does. I mean, in my opinion, that's what the options market. That's the primary use of the option market, is for players to hedge and put on insurance and protect their positions. All right. So, like I said, when it's all about odds to me in this game, and I recommend you look at it the same way. There are no exacts. There are no definites. You try to line up the better odds in your favor. We refer to that as an edge, and that's where you find consistency, and understanding that no matter what lines up, no matter how great the odds may be, you still take the risk of a loser, obviously. Okay, so that's pretty much what our outlook has been throughout this whole phase here. Okay, again, the probability of protection hedging goes higher, so you got to take a lot of the activity with a grain of salt. We know we're in consolidation, so our expectation levels have to come down, and we have to be patient and wait for things to set up. And in the Steam Remore definition of a setup is, again, some weakness, some of the short-term sentiment we look at, some of the retail put the calls and stuff like that we look at on a daily basis. We wait for the bears to get a little giddy. That increases the odds of a potential squeeze, and that could provide a nice wind at your back, obviously, on the long side. Okay, so again, that's our outlook. But all in all, if as a trader you've been selective and try to stay disciplined and do the things you need to do, and sometimes you're going to break rules. I mean, it's part of the game. But for the most part, if you stay disciplined and pay attention to that, there's been opportunities out there. There's been money to be made. Now, again, not every single name has worked out the way traders expect, but there's been a hell of a lot more winners than losers, and there's been more setups than, I won't say than usual during earnings season, because it all depends on the earnings season, but you can't complain about the setups we've been seeing. And I'll run through a couple of them so you guys could see what we were looking at. Let's take, for example, let's take the overall market, okay? And if you guys were on the past, last week and the week prior, I was talking a little bit about how a play on the overall market, what we're looking for sentiment to line up, and then signs of the flow start to turn. Okay, that's a timing mechanism. But as a swing trader, you're just looking for the sentiment to line up where puts are getting overheated, and that tells you that a squeeze is likely over the course of the next couple of days. And we've seen quite a few of these setups. I guess with the geopolitical tension and everything else surrounding, there's been quite a few setups like that. We spoke a little bit about it last week, if you guys remember. Okay, there was one right here where the put side got overheated, especially on the retail side. And, that was the Thursday before Easter weekend, if I'm not mistaken. You come in Monday, wasn't even that huge of a gap up, small gap up, and the market just strengthened throughout the day, and you got a 25-point rip on the S&P. So that was playable. We just had one a couple days ago this week. Same exact scenario. This particular day right here. Okay, we saw that the retail put buying was reaching a climactic state where people were getting a little too nervous. Yeah, whatever reasons, God only knows why. So that set up another opportunity for a potential squeeze, and very similar to the one prior to that, we had a little bit of a gap up, and then we just saw wise guy call sweepers go bananas right out of the gate, into the small strength that was there. I think the S&P was roughly about up 3 or 4 points at the time, if I'm not mistaken, and we've just seen the whole board light up green. And again, for another 20-point squeeze. All right, so the overall market has had quite a few setups like that. And like I said, you throw earnings, North Korea, government shutdown into the mix, and you're going to get several opportunities like that. if you can take advantage of it. Now, I don't see why, if you're a so-called trader, that you wouldn't be able to take advantage of it. But that trade has been there for several times. Over here, the same thing. This actually lined up sentiment-wise, and it may not look on it on the screen here, but this squeeze, both here and here, were tradable. Then we had same exact thing on this bar lower, the flush. Got everyone all bared up. This squeeze was powerful. We had it here. I think the signal actually came a little bit early there, so you had to stomach, a little further downside, but then they reversed that, as you can see with that candle, and you had a squeeze. So just to give you an idea of what we've been looking for, the type of setups we've been looking for as far as the overall market's concerned, okay? And throughout all this noise, okay, because in reality, look where we are, okay? All this noise, all the dramatics of North Korea and all Trump this, Trump that, Trump rally over, no tax bill, no this, we haven't gone really anywhere. It's been a small pullback from the highs, just, again, a lot of noise and consolidation, which is good. But I'll tell you what this did do, okay? If you guys remember telling you that this rally here, more than anything, okay, after all this, when this rally started to heat up, we really started to see some of the longer-term sentiment stuff, and you guys probably seen it all as well, really get all bulled up. Every single sentiment reading that was out there, whether it's hedge fund exposure positioning, the smart money, dumb money, that sentiment trader, any sentiment reading out there was getting ridiculous. Probably I would say mid to the end of this rally. What this consolidation did do, it knocked out every bull you could possibly imagine. So in other words, in simple English, it washed out all that extreme bullishness that came, mid to late rally over here. That's a good thing. Because, again, when you look at sentiment, a lot of people look at buy-sell signals immediately, and especially that longer-term stuff. That's not what it's for. When you see extreme bull readings on the intermediate to longer-term sentiment stuff, my interpretation of that is the risk-reward is not in your favor. Okay? Just logically, if everybody is positioned on the long side, if everybody's already long, there's not much left to buy stocks, right? That's just logic. So even though the market was pushing higher and a lot of traders were ignoring those sentiment readings, thinking that it's wrong because they can't be used as a timing mechanism, what it told us is that something like this needed to come, okay, and wash out some of those bulls. That's what the market does. So whether it's a vicious pullback on some sort of news that will do it, or this choppy, lengthy consolidation, something was needed to wash out a lot of that extreme bullishness. And it did, and then some. The CNN fear greed, I know a lot of you guys heard of that, and just, the CNN fear greed is not a bad sentiment indicator. I know a lot of people see the word CNN and they think it's Fugazi or something, but there's a lot of good stuff in there. Put the calls, a lot of breadth stuff. You could go online and check it out. What makes up the indicator. It's pretty cool. And we were at extreme greed, obviously, at the top of this rally, and now for the first time we've actually dipped into the fear zone. Believe it or not. Think about that. From extreme greed for this whole stage of the rally, we're right here basically. We're still higher than where some of those people were all bulled up, and people are fearful. So that's the beauty of what this type of consolidation can do. That's the positive in it. And that's why if you grind it out and trade the right way during these type of environments, wait for the bigger setups to come, that's when things get a little bit easier on the long side to where you can allow some winners, allow them, a longer leash, and let them run. Okay, so that's the good that came out of this whole thingy here, besides some of the shorter term setups that could have been traded. And the names, aside from earnings being in the way, and what I recommend to a lot of traders during earnings season is if you like flow in a name, okay, and you have earnings in the way, you may want to take a shot, try to make a little bit of money before earnings, and then you could always leave a runner into earnings, if you like that name or like that flow. And just a couple examples of that, JD, okay, really, really aggressive activity in JD. And it came during this consolidation. Okay, and we were seeing BABA catching some really nice activity. The China names were showing us some relative strength. So JD, let me pull up here. I could show you guys what we were seeing so you get an idea. Let me move this out of the way. So like you heard me mention before, one order can mean anything, right? Especially in an earnings period. One order could be a hedge, could be protection. But when you see players getting aggressive, players, funds, whatever they are, getting aggressive in that name, that would be a stronger signal, obviously, than just one order. And that's what we saw in JD. You could see here, besides the flow coming into the April period, here on April 3rd, you got a $600,000 sweeper, made 32 calls when the stock was $31.60. Here you got another $500,000 block buyer, roughly a little higher, same price. You got another $440,000 sweeper here on April 6th, and that's the action that hit the board. The bigger size action. There was even some smaller accumulation that I post manually in the room, and you can see it's this period right here. So it allows you the chance to get in, maybe buy a day of weakness, where you get that little bit of a pullback. You're getting options at a better price. You're getting the calls when not a lot of people are excited about them, as opposed to, let's say, a green day. And then, before earnings, you get this type of move to take some risk off or take the whole piece off. That's up to you as a trader. But again, it gives you the opportunity to it gives you the room to make that decision before earnings. Now, if you hold through earnings and lose all your money, you're an idiot. Let's be honest. But again, you have an opportunity to lock some profits in, leave some exposure. If you really like the name, I'll look for more. Another one was Visa, and forget earnings. I'm not even talking about Visa off earnings, okay? Because I'm not a big fan of holding it to earnings. Period. I recommend against it. Like I said, if you want to leave a lotto, a small runner, a free runner, that's fine. But I recommend totally against holding it to earnings. But Visa, even more so than the JD, we've seen them tattoo this consolidation right here. Oh, I have it right here. Why would I do that? So here's the Visa. And you guys who follow me on Twitter know about the Visa because I posted it several times on there. So let's go. Again, you could go back to here, March 30th. Okay, look at all these orders here down here. Okay, again, you're unsure. You think it's just one day of action. They come back April 3rd, hit it up again. I mean, a $700,000 sweeper there, $1 million block there on these May calls. Here, June action, 350 grand. You're still not convinced? On the 5th, June 90s, 365 grand. On the 11th, this is all April, another 650 grand. And even some of these small sweepers like you see here for 47 grand, there was even more of those that didn't hit the board because they were small that I would manually post. My point being, there was a ton of activity in Visa. And throughout this whole thing here, it was from what, the 30th we said? Yeah, so basically this whole stretch here. All right, now the biggest concern was, will you get that pop before earnings? Will you get some sort of tradable move before earnings to at least lock some profit in and leave a runner if you want? And that's where we've had the luxury of seeing this happen prior to earnings. It's not always the case. I'm not going to lie to you. It's not always the case. But some of the stronger activity, and what I mean by stronger, it's, again, not just one order, names they continue to come after. That, to me, is strength. $1 million block of calls could mean anything, okay? And that's great. But if it's earnings season, there is a decent chance that could be stock replacement, hedge of some sort, whatever the case. It could be a variety of things. So I want to see that aggressive behavior where they continue to come after and accumulate something. Okay? Because then the odds go up that maybe it's a little bit more of just some earnings related position. And then, the Visa, what is this? Am I missing a bar here? But you know what happened with the Visa. The Visa had a nice lift. Earnings, I don't know if it reversed. I didn't really pay attention to it Friday, but, had a tradable move. You could even hold a piece into earnings. Even some of the under the radar type names, like this ILG. I don't know how many of you were in the open house we had on that Friday. The flow was hideous that day, awful. And if you guys were there, you remember me saying this was the only decent action that whole entire Friday. So on the call side. So out of all that order flow, guys, okay, if you were in the open house, you have a better idea. Out of all that order flow that Friday, this was the only activity that stood out to me and a lot of us. It was the only clean activity. All right, and same thing here. This is a timeshares play. They do timeshares. We have no idea why they're buying. But they came aggressively for this thing. And where it goes from here, God knows. But that's where you look to manage the position. Whatever you feel comfortable with, whether it's scaling out, trust me, I have no advice for any of you on the sell side. I'm the worst. So don't talk to me about that. And don't listen to anybody who tells you they're good at it, because everybody has trouble with it. There's no easy answer. But again, when you're profitable, those are the good decisions to make, and when you get this type of move, again, you could scale out, you could take the whole thing, curse yourself out when it goes higher, whatever it is, it's up to you. IACI, IAC is the symbol, I'm sorry. We saw activity here in this period. The box is still there. Okay, what we liked about this name, we weren't chasing this. Okay, we don't want to chase something like that up here after a rally. Rallied, nice, and then some nice consolidation and some weakness, right? Bottoms out, and then all of a sudden here, they start aggressively going after this name. This name in particular had the luxury of the 2 days later, a day or two later, having a pop to sell into, which a lot of us did, believe it or not. And then now you look at that, there's even more follow through there. And I'll pull up the activity in IAC so you guys can get an idea. And you can see here, 330, right? Half of them, $450,000 sweep. And then 331, they came after it again, aggressively. So you see what I mean about the type of activity and what I refer to as aggressive or the stronger activity. And that's not to say you can't trade off one sweep, okay? But what I recommend is if you're using the flow and you're trading off just one order, like I tell everybody, it's got to line up with something you're looking at on your end. Like Friday, we were discussing with a couple guys in the room about, let's say, Fibonacci's. A lot of people follow the Fibonacci's, okay? And, for example, a name comes down to this old famous 61.8, and you see a call buyer or wise guy sweeper come into the name around those levels. You don't have to wait for more necessarily. You could use that as confirmation, and that could be an entry point because it lines up with something else on your end that you've had success with. But I mean, we get a good amount of people who come in with a strategy already, and that's the people who are more likely to have success already have some type of strategy they look at and they use this as confirmation. But there's also a lot of players who just come in and just are solely relying on the flow. All right, and if you're solely relying on the flow, you cannot take every single flow update, flow alert as a recommendation to buy or sell. That's not what it's for. You wait and you wait for that clear picture to smack you in the head. That's, sharp money is aggressively coming after a name. So if you're relying on just the wise guy flow, that's the type of stuff you're looking for. Okay, and nobody expects anybody to have an eye for that immediately, but trust me, it's pretty easy. If I can do it, it's pretty easy. And we see that each and every day. I mean, people, spot the flow just like I do. When you see Visa and you see us talking about a Visa sweep over a 3-4 day stretch, a couple times a day, every day, you don't need to be some options aficionado to notice that. When you see IAC catch a really good looking order, okay, get your attention, and you say to yourself, all right, that was interesting. And then the very next day they come in and sweep 3 different lines the same exact way. Obviously somebody is bullish on the name. So, that's what we focused on. But JD, the IAC, the Visa, some of the strongest activity that we've been seeing that has worked out well for the most part. On Friday, we could go over some of the action on Friday. Wasn't anything too crazy, but I'll give you an idea of some of the other plays that are a little more speculative. A name like this THC, all right, looks like absolute crap, let's be honest. But all of a sudden, again, not into strength, but after being mutilated, we had some activity come in, both early on in the day, and late in the day, I think it was around here, and sweep call side. Also some big blocks there. So whether they're positioning for a short squeeze, worried about a short squeeze, if that's the type of players you like, where you can maybe potentially get in and out and your outcome rather quickly, I mean, this is something that may line up on your end. Another group similar to that has been retail. Again, if you follow me on Twitter, I've mentioned that the retail flow, the flow in retailers, has looked incredible. Honestly, probably the best sector flow overall that we have seen. L Brands was a name, and this is what caught our attention in L Brands. L Brands caught nothing but put action this whole trip down, hammered over the head in puts. Then all of a sudden, they are flipping sides on the call side aggressively. All right, so into this consolidation, you get a little lift. I think the calls they played were up like 85%. I couldn't even believe they were up that much, but nobody wanted to play call side in these things. And, that's a nice trade. I'll just show you the Flow and L brands. We don't need to look at the Flow in all of them now. They're spilled milk, but just for you to get an idea. Okay, so you could see going back to, let's say, March here. We don't want to go too much further back than that. But you got puts, right? Size puts. All of a sudden, you got some call action. Again, not just one order, in size. Okay, that was on 4/11. It was actually a solid day trade. I remember day trading it. But that was on 4/11, right here. Oh yeah, you can see there, because it had a nice close, a nice push off the action there. So they came into this little dip, squeezed higher, sideways, and then you get a little lift to sell into if you took it for a swing. Another retailer was this FINL, Finish Line. Yeah, they've been attacking this for a while now, but they started into this gap down and have played it to the upside ever since. But a lot of retail names. This KSS caught a bull risk reversal. Was it here? I think it was this day. Yeah, you get a nice pop to sell into the next day. I mean, that to me is a trade right there. I know a lot of traders look for more than that, but in this type of environment, you give me stuff like that, I take it all day long. If I like it, again, not to sound like a broken record, I'll leave a small runner. If we get through earnings season and the overall flow starts to look aggressive on the bullish side, and we look like we're breaking out of this little consolidation to the upside, then it might be a different story. Maybe you choose to let some of the things have a longer leash, let them breathe a little bit more. But especially when you're playing option guys, when you're playing on the call side and you're that active, you can't expect every single bet you make on the call side to just run 100, 200%. The 40, 50, 60% over the short term, that's real money. That's real money. So I want to get to some questions, and we could talk a little bit about what we're kind of looking at going forward. Again, I try not to get into the forecasting business, because as long as I've been in this game, I know there's no such thing. It doesn't exist. Okay? Nobody knows what the hell's going to happen. You may have an idea. You may think the odds are in your favor of a specific move, but in reality, we really don't know. So what I try to do, especially now during earnings season, because the flow can get sloppy, like I said, and confusing is a better word. We take it each and every day, and slowly but surely, more and more names report, and post-earnings flow is actually the opposite of earnings flow. It's extremely useful. Could signal certain major rotation going on in the market. Names with maybe earnings weakness that they're coming in and taking advantage of. So as we get a little further through the earnings season, at least through some of the big tech names, we get a little clearer picture of what may be going on here. Because right now, earnings is sort of our guide, right? I mean, if tech comes out and shits the bed as far as earnings is concerned, excuse my French, there's either going to have to be some major rotation going on, or otherwise that's going to be quite heavy on the market, no matter what we're seeing right now. So we want to kind of take a wait and see approach, and I already explained to you the outlook and the playbook, basically, of what we're looking to do throughout this consolidation here. Anybody have any questions as far as activity, some of the stuff we spoke about here? Let me pull up this so I can see. Hang on. And let me try to get this in chronological order, if there's such thing. Hold on. Bear with me. Okay, there we go. All right. Tomer saying, I wish the search feature would also include your room post. Yeah, well, here's the thing, Tomer. It gets a little difficult. In the old chat room, we had where any symbol that was mentioned, you can search the symbol and see the commentary. But the problem was that with that was you can see all the commentary from everybody. What we have now is this. How can I move this out of the way? 1 second. Okay, there we go. We have this filter tab. So basically, this is just my comments, my commentary on all the activity. You understand? So in other words, I know what you're probably referring to some of the action, going back and seeing some of the small sweeps of the past, and that's difficult. They're trying to figure out the best way to do that, but we have this filter tab. So in other words, if you want to see if L Brands caught any additional smaller momentum sweepers aside from what hit the board, you can find it easily now with this filter tab, rather than sifting through all the commentary, you know. But yeah, we've had a lot of requests for that. We're trying to find the best way to do it. You know, the issue is, Tomer, we already have enough activity hitting the board, and if I was getting different feedback, you know, I get from some of the more experienced traders, they want more flow to hit the board. Some of the newer members say there's too much flow hitting the board, you know, because they're not really looking at what they should be looking at, you know. So we're trying to find a happy medium there. It's not as easy, but we're always working on that stuff. What else we got? We got from Jim. I'm looking to add premium to my short-term option trades. Depending on market trend at the time of taking the position, I'm selling premium spread calls or puts. It's working for now. I'll take small winner base hits rather than. There you go, Jim. I mean, again, that's a strategy that you've had success with. You know what you're doing. And like you're saying, you're taking the base hits. I mean, that's the perfect outlook, in my opinion, for the environment we're in right now. Anything more than that, you're going to have to take on more risk. And as long as you understand that a lot of winners can turn into losers at the snap of a finger, as long as you're okay with that, that's fine. But that is a solid strategy. The thing is, Jim, you know, I refrain on getting into some of the selling premium and complex strategies, because if you don't know what you're doing, you shouldn't be doing that, and I'm sure you would agree with that. You know, it's a dangerous thing for traders who aren't experienced with that sort of thing. So, but without a doubt, Jim, that's exactly what I'm talking about. Alarich, if I mispronounced that, I apologize, is saying, hi, Jesus, how can you know whether either the puts or calls are getting overheated? There's several things we look at in the room, Alarich. We look at just the basic end of the day equity put the call, total put the call. We're looking at retail put buying, ISE put buying. There's one, we call it the squeezometer, one measure that we look at throughout the day in the steam room, a pretty simple odometer with green and red that tells us when the call side or the put side is getting overheated, and when we should either, you know, be looking for an entry if that's what we wanted to do, or, you know, taking risk off and maybe raising stops if calls are getting overheated. So they're basically, all I'm looking at is in the options market. So it's not any surveys or anything like that. It's shorter term stuff and all in the options market with real money being put to work. Nina saying, the problem, many are not optionable due to the spread, but you are right. What are you talking about, Nina? Are you talking about some of the more illiquid names? Without a doubt. Without a doubt. For example, Again, it's kind of understanding and having the plan. Let's take this ILG, for example, okay? This was one of the strongest action plays out there, all kidding aside, okay? Because it's a name that rarely catches activity. And not only did it catch activity, I mean, they were really aggressive here, really aggressive. The problem with names like this, the spreads on those calls, that's what Nina's saying, are a disaster. So automatically, if you're jumping that spread, in other words, paying the offer, if you wanted to sell on the bid right after you bought it, you're losing money because of the wide spread. Okay? And the other problem is the liquidity. You know, if you want to get out of them, it's not that easy to get out because these options aren't that liquid. So what I would recommend is what I say to a lot of people. Either if you're an equities player, okay, and that's right, this room is not just for options players. You know, we have a lot. I trade equity myself. I don't know if you guys are aware of that. I'm not trading options. I'm trading the equity. We have players that are trading, you know, just trading futures based off of what I was showing you earlier, sentiment and flow. You know, so this is not an options trading room. And I think a lot of people misinterpret that initially because we're watching options flow as an indicator. Okay, but you could trade equity, you can trade anything off the options flow. We're just using the flow as an indicator. But what I recommend on names like this, if you're an options player, is rather than any stop loss or anything like that, you're willing to risk the premium. So in other words, if you say, all right, I'm willing to lose $5,000 in this trade, I'm putting $5,000 into this trade. That's it. If it doesn't work out and I can't sell it, it goes to zero, I'm fine with it. I'm losing the $5,000. So that's like your stop loss. Okay, you may want to play bigger size, but in this particular situation, you can't. You know, and apply a stop loss to it and expect to get out of size. So that's the way to play these things if you can't play the equity. But, you know, as far as the equity, a lot of these names are liquid. All of them are liquid. What else we got? Jim is saying there's a lot of geopolitical activity this week. Do you feel it's kind of wait and see? Jim, I think it's wait and see anyway, no matter what. Really, the noise is the noise. You know, God only knows what the hell could happen. But I will say this. The reason why the dips, the pullbacks we see when there's bearish sentiment behind it, if everybody is getting all bared up and putting on a ton of protection into weakness or the long weekends when there's the potential of a geopolitical event, the odds of those put buyers being successful and making money are so small. Okay, is it possible? Anything is possible, Jim. If we didn't hear any geopolitical noise, you know, 9/11, anything could happen. So, you know, sometimes we forget that. Sometimes we think when everything is beautiful and there's no distractions around, that's the best time to own stocks. In reality, that may be even the worst time to own stocks. Okay, so the fear is fear, and I understand the reasons why, but I would approach it just as I would approach any normal market condition. I just think it's smarter to take advantage of the weakness because what we're seeing, not based on geopolitical events, we're seeing players sell strength. Okay, it's evident in this market right now that players have been selling strength throughout this consolidation. They're buying the weakness, but they're selling strength. So the prudent thing to do is wait for some weakness if you're looking to put on positions, and again, take some risk off into strength or the strategy you mentioned, you know, just basically getting the job done the same way. But yeah, you know, as far as risk, you go nice and easy. You don't want to go all in per se. You know, you want to play nice and easy. Right now, what concerns me more is earnings more than anything else, because I can't really get a clean read on the flow. You know, there's a lot of put buying out there. I don't know if it's just people protecting into earnings or there's something bigger they're protecting against. The flow is hard to get a true gauge off of right now. But earnings season, you always want to take a step back, in my opinion. Nice and easy. Steven saying, would it be possible to have, excuse me, weekly periodic reports that track the names and the most accumulation activity? And yeah, we are working on that as well. See, that's something I would have to be involved in, to make sure the right flow is being mentioned. You know, the other thing, Stephen, comes into account, for example, MU, okay, catches action all the time. And we were talking about this in the last webinar. If MU's catching action up here, you know, it's not as strong as a signal as the JD or the Visa action we were seeing. That's initial activity into strength, into consolidation. You know, Micron, the flow has been going on here forever. I mean, exactly what we're seeing now in Micron flow-wise and been seeing, this has been going on a long time. You know, similar to what we were seeing in Apple for such a long stretch this year. So Micron's the type of thing you wait for on a pullback, okay? Like we were saying, earnings, right? Caught a ton of activity, gapped up on earnings. The last thing you want to do is buy the gap up right there. So you wait for some sort of pullback consolidation. You see some flow come in. Then you can take a stab at it. But you have to understand, like, yeah, this thing already has moved big time off the action. The action started all the way back here. So my point being is I would want to be really involved in a write-up like that, because I don't want people misinterpreting, you know, flow that's coming in at higher levels as strong activity, that type of thing. So eventually we'll get there. Right now, again, it doesn't come close to that, but, and this is a good plug for this. This is free for all of you on here. There's no reason for you guys not to hop on this. You could join the Steam Room community, and you know, we do the audio, video broadcast, pre-market, some aftermarket stuff, market updates. And I throw a lot of stuff in here. I'll review some of the stronger activity that day. So this way, just in case you didn't see it throughout the day, you can take note. Similar to what I do on Twitter, just more of it. You know, like this TGX action that came in, all post and pre and post market stuff in here. To get that, you go to wallstreetjesus.com and you click on market updates. All right. Also, the action review is in here. Strategy. If you guys aren't familiar with sweeps and all that stuff, there's a couple of blogs in here reviewing that stuff. You know, how do I use this information? How do I know if an order is a bet or a hedge? Does it matter? What are sweeps? All that kind of stuff. So right now, Stephen, all we have is this. That's open to everybody. Open interest we talk about as well. But eventually we'll get there. We'll get there for members regarding what you mentioned there. What else we got? How much of the SEC filing do you guys read into? Not much, Doherty. Not much. You know, what we see a lot is sometimes if we see a really sharp, if we see sharp activity come into a certain name, what we'll see is, I'll give you an example, and a lot of members can vouch for us on this. ARNC. We were seeing aggressive activity in this name. I had no idea. A couple of the members in the room told me, I think they were a spinoff of Alcoa at the time. I had no idea what the hell this thing did. I never heard of it. The Arconic. To make a long story short, we started seeing aggressive sweeper activity. And then all of a sudden, the 13F came out, Elliott Management, which, by the way, all kidding aside, we're seeing a lot of sweeper activity. Elliott Management came in, took a stake, and was shoving this company around a little bit. So you could see what it ended up doing for the stock. So we'll see that after the action. We saw it in Tesla. I don't know if you guys remember, we saw it in Tesla recently where we saw a deep in the money sharp call sweeper in Tesla, and then a week later there was a filing that some big guy took a stake there. So that's about the extent of it. Now, do other traders in the room use that in it and incorporate the flow into it? I wouldn't be surprised, if they do. Like I said, there's several different, no matter what strategy, you give me a strategy you use, you tell me the type of trader you are, and I could tell you the way to use the flow. I'm serious. It's that easy. The difficult part is giving that blanket statement that applies to everybody. You understand? Oh, I'm a day trader. I'm a swing trader. I look at this. I look at that. And people want for me to give them one answer that applies to all of them. Where it's impossible to do. Like I said, we may see flow in a name like, let's say this THC. I day traded it. Some of the short-term traders who are looking just to flip it. What happened to my charts here? Let me just shut this down. Some of the short-term traders may look to flip it or whatever the case. It may not apply to everybody out there looking to take a stab. So that's the problem I run into with a lot of these things. My charts just went south for some reason. It was TC2000. But that's the problem I run into a lot of times, is giving that blanket answer that applies to everybody. It's just impossible to do. I wish I could do it. It's impossible to do. All right. I think I got to everybody's questions, and I just lost the other part of it. Let me see. Hang on. I think I got oh, here we go. But yeah, we'll do this again next week. We got another one. I'm almost positive. So we'll do this again next week. We'll touch on the action and so forth. But again, what I would recommend action-wise, we're in the heart of earnings season. There may be some stuff, if you're quick enough, you want to, you can play up until the earnings, make a little money, leave a runner. I don't see it as being prudent as far as taking big risk into earnings. It just doesn't make sense to me. When we can be patient, and like I said, the banks, for example, I didn't even get around to the banks. The banks' earnings are done, and we've just seen some decent activity come into the bank space. I mean, some solid flow. We saw Bank of America, of course. That's their baby. You know that. Bank of America, my charts are south here. Bank of America caught some action. Morgan Stanley caught some activity, solid activity. We even seen FAS catch some activity. So the banks could set up a trade here on any weakness. You watch flow, could offer an entry, and you get that green to sell into. Or if you're looking longer term, bigger picture, depending on the trader you are, waiting for the right spot, maybe wait for some weakness. You see flow come into the banks. They're at a nice level off a nice pullback. So that's what my point being is that once we get through earnings, the flow really matters. Right now, you got to take it with a grain of salt, especially these hit and run type action, as I like to call it. One order where they buy a block and they disappear. So we'll see what happens. But all right, guys, I'll let you guys run here. I appreciate, like always, you guys coming out on the Saturday, spending some time. If you have any questions, you know where to find me. Again, join the free community because we talk every morning post-market. Here's the lounge. A lot of cool traders in there. They come here every morning, talk about what they're doing, and this is just a free room. You get that with the market updates. So there's no reason not to join that. If you're interested in joining the Steam Room, throughout this Saturday Sweep Series, we're offering half off the first month. Okay, so right here, just go to wallstreetjesus.com. You got this here. This is half off, 50% off the first month, and you get basically you get everything with that. You get the alerts. You get pre-market broadcast. You get the post-market webinars every week. You get me on audio, video throughout the session, basically giving live play-by-play on all the order flow, my impression on the order flow, which I think is more aggressive than the other, what may be worth a swing trade, what may be worth just a day trade, stuff like that. So that's what you get with the premium package here. Okay. We also offer a private Twitter. That's just basically private Twitter. Okay. You get the alerts there. Here it is. You get the flow, some comments, and none of the webinar stuff like that, none of the recap, none of the pre-market broadcast. This is just $59.99 a month. So a lot we spun it off to make it more affordable. Again, if you want to learn more about the flow and strategy, obviously the Steam Room is the place to be. But if you can't afford it at the time, you're just interested in the flow, or you're just trying to get a feel for the flow, we do a pretty good job of it, again, on private Twitter. But I expect to see all you guys in the lounge anyway. And I'm going to be more active in there as well, broadcasting, maybe on the weekends or aftermarket at times. All right, guys. Thank you so much for coming out. Have a great weekend, and I'll talk to you guys during the week. Be good, everybody.